learners, in the last video we went over a real estate investment trust called Melcor REITs, and in that video I promised we would dive deeper into how to analyze a real estate investment trust in detail, looking at financial statements and whatnot. Now, since we're going to be doing this for multiple real estate investment trusts, I came across a problem, and that problem was, what are some standardized metrics I can use to look at every single real estate investment trust so they can be comparable with each other and I can tell which is better. Now, after like 8 hours of thinking and work, 5 of which was probably procrastination, I came up with a list of 5 metrics that I will use moving forward to analyze real estate investment trust, in addition to a bunch of other metrics, because why not? So if you want to know what are some specific profitability, financial structure, and valuation metrics that are specific to real estate investment trusts that you can use moving forward, then keep on watching. Alright, the first profitability metric that we're going to use to analyze real estate investment trust is something called AFFO, Adjusted Funds from Operations. And what this is the amount of money you've earned from your operations minus the required capital requirements to maintain your operation. So you're looking at capital expenditure, you're looking at lease incentives, you're looking at any sort of other incentives that are required to continue your operations. Now, why do we use this number instead of a number like net income? Well, turns out according to accounting law, real estate investment trusts have to realize the increase or decrease of their real estate portfolio, namely the property, the land, and they have to realize and recognize all of that within their net income. So if at the end of this year, my property evaluator comes and decides that this property is worth $1 million more than what it was worth last year, then all of a sudden I have to realize $1 million more in my net income, which isn't necessarily that accurate. The same goes for amortization of leases, appreciation of long-term assets, adjustments to fair value of certain assets, all of those things that don't really impact how much money you make, but we include in net income anyways, that we want to take out. So, adjusted funds from operation for analyzing real estate investment trust, that's number 1. Number 2 has something to do with that, and that's adjusted fund from operation per share. And the per share number that I like to use is the diluted number of shares. That is, if people took all of their convertible debentures and changed it into shares, what would the dilutive effects be? What would the actual number of outstanding shares be fully diluted? That's the number that I take, and for that number you have to dig a little bit into the annual report. They have to report it. It's the diluted number of outstanding shares. I always use that number. Reason being, it's the most conservative number, and I don't want to fool myself with a smaller number that makes the calculation better. Right? And this is also important because the way that real estate investment trusts are set up, they have to pay all of their taxable income out in dividends in order to avoid that tax. So really, the only way for them to raise more financing is through either debt financing or equity financing, issuing more shares. And so if I'm able to calculate the AFFO per share and compare it over time, I would be able to see if the company is effectively utilizing their equity financing, because chances are the number of shares that are outstanding has increased over time, and I want to know that the company has the cash flow to support that increase in shares, and that shareholder value isn't just being diluted over time. Alright, so the next metric that we're going to look at also has something to do with the company's profitability. And I'm going to give you a 2-in-1 deal right now, because I'm going to give you 2 metrics for this number 3. I don't know how that works, but it's going to work, so let's go. Adjusted funds from operations divided by total investment properties. If we take adjusted funds from operations and we divide it by total assets, we're gonna get their return on assets, which is a pretty important number considering that a real estate investment trust's profits are solely determined by those assets that they own directly. Now, another number that we could use to see their profitability is their base rent per square feet. In that sense, then, we're looking at how much money they are generating for each square footage of the property that they own. Now, obviously, we want those two numbers to be increasing over time, but I'm not as concerned when I'm comparing it against other numbers, just because these numbers will be different depending on the area that you're in, depending on whether your properties have appreciated quickly over time, right? Whether you're a real estate investment trust that has properties in Vancouver versus Alberta and Calgary and Edmonton. Those are very, very, very different real estate markets, so we have to keep that in mind as we analyze it. But generally, an increase over time is good, adjusting for inflation, obviously. Fourth thing that I'm going to look at has to do with their financial structure and their profitability, and there are, again, two ratios that I can look at for this. First one is the company's leverage ratio, which is the total debt of the company divided by the operating income of the company. And I want to compare that over time to see how the financial structure of the company has changed, whether the company is generating sufficient operating income to cover the short-term requirements of their debt. And another metric that I can use to look at that is actually the debt service coverage ratio, also called the interest coverage ratio. So I want to really look at the financing costs of the company and compare that to the operating income to see if the company can actually cover that with the money being generated. As we're looking at the company's financial structure, or the real estate investment trust's financial structure, there's another number that is super, super important to investors, and that's the net asset value. The net asset value is a company's total assets minus its intangible assets minus all of its liabilities. In a sense, it's how much the company actually is worth right now. And it's super, super interesting for a real estate investment trust because the trust has to report all of their long-term assets, their properties at fair value. So if we actually calculate the net asset value for a real estate investment trust, we get a pretty good estimate of how much money the company is worth, the trust is worth, if it liquidated, if we sold off everything that it owned. Okay, so obviously another number that is derived directly from net asset value that is super interesting to look at is the net asset value per share, because that's kind of the number per share that shareholders will receive if the company liquidated. In other words, it's the liquidating value of the company per share. And if that number is higher than the company's current price per share, then there might be reason to believe that the company is underpriced. Now, you still have to be careful because some real estate investment trusts perpetually sell at a price that is at a discount from its net asset value for one reason or another. And so as a metric for us, for investing into the long term, we want real estate investment trusts that actually produce increasing cash flows over time that can cover all their debt servicing requirements and their dividend payments. And the net asset value change per share over time itself isn't as important, just because the value of an asset is the amount of cash flows that it generates over time. And assuming that we invest into a good quality company that will continue to generate cash flow over time, we don't really have to worry about it liquidating. I know that at the beginning of the video I said that I would give you 5 metrics, but in this video I actually gave you like 8 or 9, and I hope that you understand these metrics that I've given and presented to you. If you don't, make sure you leave a comment down below with a question. I'll try my best to answer you, because in the next video we're gonna actually dive in to the financial statements of Melcor, and I actually created a whole Excel spreadsheet to look through everything. That actually took hours, but I'm excited to see what I'll find and to share with you my findings. So pay attention, hit the like and subscribe button if you haven't already, and I have a question for you. Are you looking into any real estate investment trust? If you are, let me know down below. I might be just as interested as you. Until next time, my friends, keep learning. Have a nice day. Bye-bye.